Hello everyone, welcome to the Monday Morning Podcast. Today I've got Chris Brophy on again from Hiremii. Now, Hiremii has actually just completed its IPO process. So I talked to Chris about how that IPO went and some of the updates that have been released recently. Just for a recap, Hiremii is actually a very interesting company because they're using AI algorithms to potentially disrupt in a major way the recruitment industry. Here's Chris. Okay. Hey, Chris. Good to have you on again. How's it going over there?
Not too bad, Lachlan, and good to be back again.
Awesome. Well, my first question for you today, Chris, is you've had the IPO. We talked to you before the IPO. I was hoping you could run us through that process a bit and I guess some of the results from that IPO.
So, overall, Lachlan, the IPO went very well. From a demand perspective, we were almost 2 times oversubscribed within at least the first 48 to 72 hours from a book build perspective. The listing itself went well, albeit the share price suffered or languished a touch thereafter. Productive tech stocks out of the US taking a little bit of a dive 24 hours prior. And then, of course, we're still feeling continued pressure on tech stocks going forward, as well as this end of year tax loss selling. So, but all in all, IPO was a success, and the business has never been more fundamentally sound since. So, we're looking forward to the new financial year.
Awesome. And I noticed you had an update out. There were some interesting financial metrics in there for the business, some increased revenue, reduced operating cash burn, all good things. So I was hoping you could talk us through that a bit.
Yeah, so absolutely. Lachlan, in essence, we gave half-yearly audited accounts as part of the IPO process itself. We wanted to give the market some confidence post-listing that we were still tracking as per the half-yearly, and it's abundantly clear that we are. From a cash burn perspective, we've effectively reduced that to just below the $160,000 on a month-by-month basis, so on net burn rate, which in essence is a product more of the investment in the tech side of things. So we gave some flavour as to what that looks like in the announcement. So we've released an enhanced semantic matching. We've also released an enhanced parsing of the candidates' information, and then of course a self-training algorithm. To put that into a little bit of perspective, in terms of, call it in layman's terms, in essence, the net effect of that is actually diminishing our own internal cost, but also enhancing the user experience and the user journey. So from a parsing perspective, the candidate user journey is about 15 seconds from uploading a resume and having the information passed into a profile. Also means that we don't have to hire administrators to assist in that process. From a semantic matching perspective, while it diminishes our own internal requirements to get more administrators to do the shortlisting process. So rather than rely on that, we rely on machine learning and artificial intelligence. From an auto training side, now traditionally what you do is you pump quite a fair amount of data into the AI machine learning algorithm itself to teach it, for lack of a better word. But rather than do that now, we've got a self-training algorithm, which is essentially a feedback loop, which once again diminishes our own requirement to actually do that manually. So, we're doing exactly what we've always done. We're ensuring that we invest in technology that actually diminishes the requirement or the burden of our own business. So, and we're starting to see the results of that. We also did release some revenue figures, but then purchase orders. So corporate services clients, based on a master service agreement we signed late last year, we've seen purchase orders come through and we're seeing growth in that. So we're excited. This financial year, the foundation's built. We get to focus on what we do best, and that's actually growing the business.
Now, with that algorithm, you're mentioning parsing and semantic matching. I was sort of wondering if you could sort of more clearly explain to people how that improves the recruitment industry and I guess the efficiencies that stem from that.
So I suppose there's 2 parts to that. In the first instance, it's the efficiency. And we'll use parsing as an example. Now, Traditionally, firms will go and place advertisements on job boards such as Seek, and then they'll have a stack of resumes at their desk. But rather than that, the individuals will create a profile. Part of that process is for them to upload their traditional resume. What the machine learning and AI does is parses the information, therefore extracts it, whether it be in an image, a PDF, or a Word document, and pre-populates their profile. So their user journey is considerably shorter. Our administrative burden is reduced, but it flows into the semantic matching side, which means the information is extracted to the extent that it matches a scope, and therefore we start with the semantic matching process is fundamentally enhanced. So we start matching on skill sets and the competency accrued over a period of time. Semantic matching is what it is. It is what it says, and that is matching the individual to a scope. But traditional business utilize boardrooms full of individuals to do so. We rely on an algorithm. Algorithm reduces the bias associated with that process, but also extracts information to the extent that we require. So reduces our cost, speeds up the user journey from a recruitment perspective, and that is the identification of a resource. So, I mean, we can provide semantic matching almost instantaneously, and we'll continue to enhance that. So, all in all, not a bad results for us so far.
Well, that's pretty cool because just for a bit of context, I actually applied to about 200 jobs before I got this current job, and it was a very onerous and labor-intensive process. So I think a lot of people would be very excited to hear that that process can be truncated or effectively shortened in a better way. So all of that's pretty exciting, and I think it speaks to the potential within your company to expand and grow at a relatively rapid rate given certain market dynamics. So I guess for my final question, I'm going to ask you a bit about what sort of near-term milestones are you looking to knock down, and sort of how do you think you'll get to greater market uptake?
So I suppose we've got to break those things into effectively revenue generation is first and foremost for us. I mean, we've reduced our cost base, but I mean, we really want to push the business to break even as quickly as possible. And to do so, we'll leverage, in the first instance, the organic stream, organic revenue. So 31 clients currently on the register. I mean, out of those 31 clients, we've only touched a fraction of a percentage in terms of what their net annual spend is with us. Further to that, as per the prospectus, we said that we were going to expand our own reach, and that would be through sales as well as customer service, and we've started doing so, and you see that in the announcements in relation to Andy Stone. There'll be another announcement coming out shortly, which is an enhancement of his team, and that is General Manager on the East Coast. Further to that, second stream would be additional client acquisition in the near term. So looking to get additional master service agreements in place. And I mean, we're having several conversations at the moment and looking to convert those and as soon as possible release that to the market. Third to that then is, once again, the SaaS model. I mean, we should be probably about 6 months away before we start piloting that and start releasing that to the market pretty slowly. And fourth, but most certainly not least, is effective use of the capital that we've actually got at the moment. And, that would be investing in adjacent services similar to ours and growing our revenue streams to such an extent. So 4 plans on the horizon, all of which we'd like to start seeing come to fruition within the next 6 months. So, and yeah, we've finally got a baseline to do so.
Well, that's a great summary for investors out there, and I'm very excited to see that sort of recurring revenue stream coming in through the recruitment as a service or software as a service model. So yeah, I think it's very exciting times for your business, and particularly given the change and the disruption that it could bring to a rather stagnant industry. I think that's a wonderful thing. So yeah, thank you so much for your time today, Chris. And hopefully we can have you on for a third time once things have picked up even further.
No, thank you so much for your time. And yeah, hopefully soon I can watch the space, I suppose.
Awesome. Have a good one, Chris.
You too. Take care.
Well, that was a great chat I just had with Chris Brophy of Hiremii. I really appreciated some of the insights he gave us into how exactly the business works. I think it's a very exciting company, and it's definitely one to watch in the months and years ahead. As always, like, subscribe, get in touch. We'd love to hear from you.